responsive to some of the outside influences that we've been seeing rather than initiative in terms of trying to break out type price activity?
Yeah, it's quite different than what we saw, over the last 2, 4, 6 months, Ben. It's in a direct reaction to obviously what we saw out of the Fed last week. And like you said, it is more reactive at this point. Now, we did see the dollar come off, right, off of its highs as the Fed, had that dovish stance and said that they may or may not raise rates, or if they do, only, moderately next year. But that being said, I think we have put in a pretty nice near-term bottom here, just above that 95 level here. And I honestly wouldn't doubt if we see some acceleration in the tariff talk, if we start to see some really good earnings and the economy really maybe start accelerating again, or at least showing signs of some acceleration, that we see a rally in the dollar over the next month or so.
So, Scott, how about the yen? Because, it's just the other side of the coin for the most part. It looks like now that the yes has slowed the decline as the indices have firmed up some off those lows, the yen has now slowed the run-up that we've been seeing.
Right. It was the classic case of run to the safe haven that we saw over the last week or two, and that has slowed its decline somewhat. And you know what, Ben? It's really across all of those safe haven assets. We saw the big run up in gold also really start to stall a little bit. So, the theme of 2018, in my opinion, was the anti-trade. What everybody expected and what the usual case scenario was really didn't happen. We didn't see those flocks and those runs to those safe haven assets. And then all of a sudden, over the last month, 3 weeks, we kind of saw that. We saw gold catch up. We saw that flock into the yen. Now that's kind of backing off a bit.
Yeah, Scott, with everything that's been going on currently in terms of the kind of grandeur sort of global currency discussion, should we expect to see financial markets, continue to exhibit some of the volatility? Earlier I mentioned that they've been somewhat responsive. Now I'm thinking, again, that they're more like kind of digestive. We still have more questions than answers when it comes to Brexit. Trade remains a major unknown. The Fed, who recently hinted a willingness to slow the rate, that they're normalizing rates. Do you feel like these currency traders are kind of sidelined, watching and waiting for more details, and as some of this volatility has been playing out here?
Absolutely, and I don't think that the risk headlines that we had just 3-4 weeks ago have really ebbed at all. Yes, we got the Fed out of the way, but just temporarily. But everything else that you just mentioned is still front and center.
Yeah.
And I think we are in for volatile markets, especially with earnings coming up just a week or so away, the start of earnings season. I know that we've had this nice rally in the market over the last few days or so, but that all the big multinational companies and how many of the S&P 500 companies are going to come out and either guide or at least speak to the rhetoric of how tariffs have impacted their business, what is happening moving forward. So I think the volatility that we have experienced over the last 3-6 months in no way, shape, or form is in the rearview mirror.
Yeah, Scott, let's talk about the Bank of Canada, because while expectations for the most part are a little bit more dovish, again, you've got to be focused on the fact that the crude's been selling off. The Canadian dollar, while it's recently come off new lows, still for the most part holding near lower levels that we've seen over the last couple of years. Any expectations for a rate hike this week from the Bank of Canada, or is that just still on hold with some of the ups and downs that we've seen in crude?
Yeah, I still think it has to be on hold. There's way too much uncertainty, especially in the crude space here. When you see this volatility, you see crude, trading in 5 to 10% moves on a daily or every other day basis here. There's way too much volatility there. There's way too much uncertainty. I would be very, very surprised if we saw any move out of the Bank of Canada here.
So, Scott, we recently heard from the Fed, and they made it real clear, data dependent for the most part. They were going to keep an eye and watch the markets and listen to what the markets were telling them. I'd imagine with some of the weaker than expected EU data that we got overnight, it looked like German industrial production continues to be an issue.
Terrible.
Seemed like PMI was the discussion last week, but I'd imagine this is something that the Fed's going to be dialed in on. And even though it's the EU, I mean, ultimately, with the global economic situation and the ties that we have to everything and intertwined, this has got to be something that a blip on the radar at the very least.
I think it's more than a blip on the radar, Ben. You know, outside of the jobs number that we got on Friday, which was a fantastic number, but that can still be revised. That ISM, manufacturing index number we got on Thursday, that is major concern to me because that threw up the red flag that the weakness that we're seeing in the Eurozone, the weakness that we're seeing throughout basically the rest of the industrialized world is maybe starting to seep in here. That was a big number to me. That, I think, is really what the Fed is going to be focused on.
All right. Well, Scott, one more question here. I want to talk a little bit about the dollar and how they've been influenced by stocks coming off, or how it's been influenced by stocks coming off those recent lows. But how about treasuries? Because I'd imagine that we can chalk up some of the selling over the last couple of days to that risk-on trade that's been present as well.
Yep. That's exactly right. And to me, this is setting up for a classic case of buy the rumor, sell the news in the overall marketplace, not just in the treasuries here, but in the equity markets at all. We have a big speech by President Trump tonight. We'll see what happens there. We don't know really what happened with the talks between the U.S. and China over the last 2 days. We're only, summarizing that things are good, but we don't really know. So this is really setting up for that classic case, like I said, of buy the rumor, sell the news. I'd be really cautious.